Let me quickly talk to you about the top 15 tax deductions for self-employed. Welcome back, folks, to another edition of the Awesome Studio Kiwi Show. How are you doing today? I hope you are doing fantastic. I'm doing marvelous if you were to ask me. And if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Today I want to talk to you about self-employed taxation, and I'm going to give you the top 15 tax deductions for self-employed. Number 1, the home office deduction. So if you work from home or use part of it in your business, then self-employment tax deductions like this one could get you a break on the cost of keeping the lights on. And you can deduct a portion of your mortgage or rent, property taxes, the cost of utilities, repairs and maintenance, and similar expenses. Generally though, folks, this deduction is only available to the self-employed because employees typically cannot take the home office deduction. So you can actually, the best way to do this is to calculate the percentage of your home's square footage that you use exclusively and regularly for business related activities. And that percentage of your mortgage or rent, for example, becomes deductible. So if your home office takes up, let's say 10% of your house's square footage, 10% of those housing expenses for the year may be deductible. And one thing that I also want to say here is that the IRS has a publication 587 where they outline a lot of scenarios, but know that only expenses directly related to the part of your home you use for business are usually fully deductible. Number 2, credit card and loan interest. So check your credit card statements for potential self-employment tax deductions. So you can deduct interest accrued on purchases that were business expenses. Very important, not personal, business expenses. And one thing I want to mention here is that you cannot deduct credit card interest accrued from business expenses if the purchase was made on someone else's credit card, for instance. And you don't necessarily need to have a business credit card to deduct qualifying interest charges. If you use a personal card exclusively for business expenses, for example, you can generally still deduct the interest charges. And it's very important to also mention that when it comes to, I want to quickly go back to the home office deduction. It's important to say that you got to keep all your receipts because the IRS is very adamant at auditing people who take very frivolous home office deductions. So keep your receipt, keep your paperwork. Deduction number 3, retirement savings. So you might have more options than you think when it comes to retirement related self-employment tax deductions. One popular choice is the solo 401k. So contribution to a solo or one participant 401k plan of up to $57,000 in 2020 and $58,000 in 2021, those are deductible. And the way it works is that similar to a standard employer-sponsored 401k, the solo 401k allows you to have pre-tax contributions and distributions after age 59 and a half are taxed. You can contribute as both an employee of yourself and as the employer, with salary deferrals of up to $19,500 in 2020 and 2021, plus a $6,500 catch-up contribution if you are 50 or older. Number 4, office supplies. I mean, here this is kind of crazy because it is something that you would think people remember, but no. There's a lot of workers in the gig economy, they forget office supplies. So the everyday things you use to run your business could score you some self-employment tax deductions, folks. I'm talking here about pens, staples, paper, postage, and similar items that you use day to day to run your business. And in most cases, you deduct the cost of office supplies that you actually use during the tax year. However, if you have office supplies on hand that you don't usually inventory or record the use of, those are typically deductible in the year you buy them too. And one thing I also want to mention here is that for bigger stuff like special equipment, computers, the general rule is that you can deduct them in the year you buy them if their useful lives are a year or less. So if their useful lives are longer than that, the IRS may view those things as assets that depreciate over time. We're talking here about capital asset, right? So even though this means not being able to deduct the full cost of the item all at once, you likely can deduct the depreciation of the item over its useful life. And that's kind of interesting too, because what you're doing here is that you are actually spreading the cost of the item over several years, so that you can take advantage of that cost over future years, and that could really decrease your taxes, because depreciation is an expense, so it will increase your expenses, it will increase your deductions, and that will consequently decrease your income taxes. Number 5, business insurance premiums. So protecting your business can also protect your tax bill, and that's pretty cool, right? So premiums for business insurance, employee accident, and employee health insurance are deductible. And the way it works is that there is a dedicated area on Schedule C for deducting your insurance premiums, but make sure you are deducting the right stuff. And if you have questions, just go and read IRS Publication 535. It has all the details there, and this is important. And you might be able to deduct some or all of your health insurance premiums if you are self-employed. Number 6, health insurance, maybe. So if you bought medical insurance policies on your own for yourself or your family, you might qualify for a self-employment tax deductions on the premiums. And medical and dental insurance premiums for you, your spouse, your dependents, and your children who are younger than 27 at the end of the tax year can be deducted. Those insurance premiums can be deducted. Long-term care insurance premiums also count though, but there are specific rules. Again, you got to go back to Form IRS Publication 535 for the details. And the way it works is that if it's really an adjustment to income rather than an itemized deduction, which means that you don't necessarily have to itemize to claim it. But you might be let down because if you are eligible to enroll in your spouse's employer's plan, even if you chose not to, maybe because it's more expensive than your own, you cannot take the deduction. So that clarification is very important. And what else you can do here? What you want to do here as a self-employed, you want to find out if you can deduct the premiums as a medical expense. And this typically works only if you pay your premiums out of your own pocket, and your deduction is limited to expenses that exceed 7.5% of your adjusted gross income. So let me give you an example. Say your AGI, your adjusted gross income, is $100,000. Your first $7,500 of medical expenses is not deductible. This is what I mean by the threshold. Okay, so number 6, business insurance premiums. Number 7, health insurance. Number 4, office supplies. Number 3, retirement savings. Number 2, credit cards and loan interest. And number 1, the home office deduction. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I'm still talking to you about the tax deductions for self-employed. Number 7, continuing education. So you have to stay smart to run a growing business, and there are self-employment tax deductions for that. And so the cost of qualifying work-related education includes things like tuition, books, supplies, lab fees, transportation to and from classes, and related expenses. All of that is deductible, no problem about it. And the way it works is that the expenses are deductible only if the education maintains or improves skills needed in your present line of work. In other words, what I'm trying to say here, folks, is that if you're taking classes to change careers, or you are working toward the minimum educational requirement for a trade or business, this probably will not work for you. But you can qualify even if the deduction leads to a degree. And what else you can do if you are interested in claiming a continuing education deduction, you can also look at the American Opportunity Tax Credit or the Lifetime Loading Credit. Number 6, you can also deduct your car if you are a self-employed. So during driving to meet vendors, make pickups, or woo clients can be hard on your car. So a self-employment, there is a list of self-employment tax deductions that might help you to recoup some of that wear and tear. So a little more than $1, you can deduct a little more than $1 for every 2 miles you put on your car for business purposes. And the way it works is that at the end of the year, you want to tally the number of miles you drove in the car for business. You want to multiply that by the IRS's standard mileage rate. This is 57.5 cents per mile in 2020, and you will have to deduct the total. Be sure to keep a mileage log though. You'll need it if you are audited. And what else you can do? You can actually also deduct your actual car expenses instead. So this includes things like depreciation, licenses, gas, oil, tolls, parking fees, garage rent, insurance, lease payments, registration fees, repairs, and tires. And you may have to do this anyway if you are using 5 or more cars in your business. And if you're leasing your car, please check out IRS Publication 463 for rules about the amount of lease payments you can deduct. Number 9, business travel and meals. So whether it is for a flight across the country or an overnight trip on the other side of the state, expenses for travel and food can be self-employment tax deductions. And so I'm talking here about flights, hotels, taxis, and food. Those are deductible expenses as long as they are for actual legitimate business purposes. And you cannot deduct travel expenses for your spouse, your kids, or other people unless that person is your employee. So generally, you can deduct 50% of the cost of a meal if the meal was business related. And I hope what I'm trying to say here is that the meal should not be lavish or extravagant. And if you or your employee should have been at the meal, one of your business contacts got the meal, and the cost of the meal did not include a charge for entertainment. And what you can do also is that instead of deducting the actual cost of each meal, which can require a lot of receipt hoarding, you can use a standard daily meal allowance. So under this method, you deduct a flat amount instead of recording every single meal expense. All right, this is something that's very important. And when it comes to the standard rate, the U.S. General Service Administration sets the standard meal allowance rate. Number 10, self-employment taxes as self-employment tax deductions. So the one of the most common self-employment tax deductions is the self-employment tax itself. All right, and the self-employment tax rate is 15.3% of net earnings. So that rate is the sum of a 12.4 Social Security tax, not the number. So it is actually the sum of a 12.4 Social Security tax and a 2.9% Medicare tax on net earnings. So self-employment tax refers to the Medicare and the Social Security taxes that self-employed people must pay. So again, here I'm talking about freelancers, independent contractors, and small business owners. And the self-employment tax rate is 15.3%. And you also have to, there is an additional 0.9% Medicare tax rate if your income is above a certain threshold amount. So the threshold figures are, if you're married filing jointly, $250,000, married filing separate, $125,000, single, $200,000, and head of household with qualifying person, $200,000, and a qualifying widower with dependent child, $200,000. And the income threshold for additional Medicare tax apply not just to self-employment income rather, but to your combined wages, compensation, and self-employment income. So if you owe $100,000 in self-employment income and your spouse has, say, $160,000 in employee wages, you'll have to pay the additional Medicare tax of 0.9% on the $10,000 extra, by which your joint income exceeds the $250,000 threshold. Number 11, phone and internet cost. So anyone from journalists to real estate agents to daycare providers and jewelry makers could deduct part of their annual cell phone or internet bill, and you can actually deduct your entire bill if you have a dedicated business cell phone or internet connection. But remember though, folks, you must use your smartphone or internet service for business, and your employer, if you have one, must not reimburse you. And if you don't have a dedicated line, you can deduct the percentage used for business. You can also deduct, and this is number 12, certain memberships. So if you belong to a professional organization, you may be able to deduct the membership fee. And generally, you cannot deduct club memberships, especially country clubs or travel-related clubs. The IRS carves out exception for memberships to boards of trade, business leagues, chambers of commerce, civic or public service organizations, professional organizations such as bar associations and medical associations, real estate boards, and trade associations. And the way it works is that the IRS, a big indication that a membership is not deductible is whether or not one of the organization's main purposes is to provide you or your guests with entertainment or access to entertainment facilities. And one thing that I also want to say here is that you can also actually, if you are not able to deduct your membership fees in a particular organization because the IRS has not approved of it, you can still deduct charitable donations. You can deduct those on your personal income tax return. Right now, you can also lump the memberships in other categories if you itemize this here. It really depends on your situation. And so if you have any question, I think it's better to contact a tax professional. You can reach out to a CPA. You can reach out to an EA, an enrolled agent. You can reach out to a tax attorney. You can even use tax software such as TaxAct, TurboTax, or H&R Block, and they have any of those providers, they have a complete platform for self-employed, and they will answer the software will answer all the questions that you have. Okay, I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I'm still continuing the conversation here about the top 15 tax deductions for self-employed. And number 13, you have a startup cost. So you may be able to get self-employment tax deductions for the cost of going into business. And startup costs generally include the cost to get your business up and running before it opens, such as grand opening advertising, salaries and wages for employees in training, travel to obtain suppliers or customers, or consultant fees. And you may be able to deduct up to $5,000 of business startup cost and $5,000 of organizational cost, which is the cost to set up a legal entity for your business, such as an LLC. However, it's very important to remember that not everyone gets this deduction. So the $5,000 deduction is reduced by the amount your total startup or organizational cost exceed $50,000. And business startup and organizational costs are generally capital expenditures, which means that they are treated like assets rather than expenses. So in turn, you may be able to depreciate your startup cost over time, and that depreciation is typically a deductible business expense. In this case, you would hear the word more like the amortization. You have to be amortized. So that's number 13. Number 14, advertising. So getting your name out there can score you some self-employment tax deduction. So you can advertising expenses directly related to your business You can deduct those. You can usually deduct advertising to keep your name before the public if it relates to business you reasonably expect to gain in the future, which gives the green light to advertising, encouraging people to take part in a particular cause, such as donating blood. So it's very important that to understand that the type of advertising matters. So generally, you cannot deduct lobbying expenses. Also, you cannot deduct advertising in a convention program or the convention program of a political party or in any other publication if any of the proceeds from the publication are for or intended for the use of a political party or candidate. And there is actually a line on Schedule C dedicated to reporting your advertising expenses. And let me also, what else you can do here? You can check out the qualified business income deduction. Speaking of a qualified business income deduction, this is actually one of the newest self-employment tax deductions out there. And this allows eligible self-employed and small business owners to deduct a portion of their business income on their taxes. And so what you can deduct here, if your total taxable income, that is not just your business income but other income as well, if that number is at or below $163,300 for single filers or $326,600 for joint filers, then in 2020 you may qualify for the 20% deduction on your taxable income. In 2021, those limits are $164,900 for single filers and $329,800 for joint filers. And the qualified business income deduction is actually for people who have pass-through income. In other words, that's business income that you report on your personal tax return. And entities eligible for the qualified business income deduction include sole proprietorships, partnerships, S corporations, and limited liability companies, the LLCs. And what else you can do is, let's say if your income is above the limit, you might still be able to claim the pass-through deduction depending on the precise nature of your business, because the deduction phases out for some businesses. And as part of the and I want to quickly say something here, that as part of the government's ongoing response to COVID-19, recent legislation provides unemployment benefits, emergency funds, retirement account withdrawals, and loans and relief for the self-employed, including gig workers. So you want to check the Treasury Department's website for more information. You can also seek out information on the Small Business Administration's website, because they have a lot of answers about stimulus checks, debt relief, change in travel policies, and managing your finances. All right, folks, this is it for today's show. I really appreciate your attention. And here are the top 15 tax deductions for self-employed that I was talking to you about. Number 1, home office deduction, credit card and loan interest, retirement savings, office supplies, business insurance premiums, health insurance, continuing education, your car. Number 9, business travel and meals. Number 10, self-employment taxes as a self-employment tax deductions. Phone and internet costs, that's number 11. Number 12, certain memberships. Number 13, startup cost. Number 14, advertising. And number 15, the QBI, the qualified business income deduction. Thank you so much for listening. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.